Welcome, everybody, to the Ashcroft Capital Value Add Fund 3 overview and update. This is a really quick, short video on what AVAF3 is, as we like to call it for short, and what are some key differences between Funds 1 and 2. AVAF3 is a 506c real estate private placement investment opportunity for accredited investors. This fund is closed-end, which means once we raise the capital needed or we acquire 6 to 10 properties, the fund will then be closed with no new properties coming in and no new investors coming in after that point. And this fund is being offered on a first-come, first-served basis. The objective for Fund 3 is to acquire 6 to 10 multifamily apartment communities in the high-growth and high-demanded Sunbelt markets. We renovate, we rebrand, and we reposition for resale. In other words, buying pre-existing multifamily units, and we simply modernize and we make them more efficient to today's standards. We target to hold these properties approximately 5 to 7 years, and throughout that hold period, we offer our investors monthly cash flow distributions in addition to monthly reporting, and then we have full financial details released every quarter right into your investor portal. A couple new and exciting updates on Fund 3 that are different from Funds 1 and 2. First of all, we're launching this fund early. We usually launch our funds around January or February, but the reason is we've got an exciting property under contract now, and it's the last year for 100% bonus depreciation. This is something that if you're looking to maximize your tax benefits, this is the year you want to get in, 2022, on this first property that we anticipate closing before the end of the year. The bonus depreciation is set to start phasing out over the next several years. For example, it'll be 80% bonus depreciation in 2023, 60% bonus depreciation in 2024, and so on. The next exciting update is we're offering investors preferential terms for investing more capital. So in the examples of Fund 1 and Fund 2, whether you are an investor who invested $25,000, our minimum, or let's say $1 million, you had the same terms, which was a 70-30 split up to a 13% IRR return, and then a 50-50 split thereafter. So in Fund 3, we're keeping our minimum investment low at only $25,000 with the same splits that you're used to seeing in Funds 1 and 2. But if you decide, for example, to invest $100,000 instead, then you have a 70-30 split up to a 13% total IRR return, and everything above that switches to a 55-45 split as compared to the 50-50 split before. There are additional thresholds from $500,000 to $1 million and from $1 million plus. So in the example of an investor who decides to invest $1 million into Fund 3, the split beyond the 13 IRR hurdle switches to 65-35, meaning that profits above the 13% IRR level are shared 65% with the investor, 35% to the general partnership. It's important to note that these preferential splits are taken from the general partner's profits and not from other limited partners. This helps to maximize the returns to all investors. Something else to keep in mind is that you can make continuous investments in the fund throughout the period in which it's open, and it's the cumulative amount that will be treated towards these preferential terms. For example, if you wanted to take advantage of the 100% bonus depreciation this year and invest $250,000, and then assuming the fund is still open, let's say in March of next year, and you want to put an additional $250,000 into the fund, you would ultimately fall under the $500,000 tier, which has a 60-40 split on profits above the 13% IRR. And on a final note with this tiered structure, please take note that this is applicable to the Class B shareholders who are participating in the appreciation and potential upside on the deals, not to the Class A shareholders, which have a higher coupon amount at 9% annualized and have limited to no upside in the appreciation. The next difference in Fund 3 is that we're starting to see some discounts happening in the multifamily sector due to increased interest rates. So we saw this also in Fund number 2, but for some added perspective, the deal that we have under contract right now called Midtown 501 is being purchased at an approximate 25% discount relative to pricing 1 year ago today. So this creates a unique buying opportunity with a potentially small window of time to pick up assets at discounted prices through 2023. And a final update to AVAF3 is that we are expanding our markets. This first deal that we have under contract is in a fantastic submarket of the Raleigh-Durham, North Carolina market. Historically, we've held properties in Texas, Florida, and Georgia, and now we can offer investors even broader diversification by expanding into more Sunbelt markets. With all of this, we are thrilled to bring you AVAF3. We're very excited for our first acquisition closing, Midtown 501 in Chapel Hill, North Carolina. To get started now, please visit avaf3.com.